On the behalf of Ambit Capital, I welcome you all to the TTK Prestige Limited Q4 Financial Year 18 conference call. Now I hand over to the management for the opening remarks.
Welcome everybody. This is Chandru here. We've had a very, very good quarter this quarter, and our best growth in top line for the year actually was in this Q4, and we've grown by about 14% as a company. That is without adjusting for any GST or anything like that. And the bottom line, PAT has actually doubled if you don't take into account any exceptional item like the tax credits which we got over last year for the same quarter for the merger of the Triveni PLT into TTK Prestige. So actually it's been a stellar quarter. It's been an extremely good quarter as we speak. And the year also has been quite good. We've registered our all-time high profits, and the bottom line has grown by almost 30% for the year. Over to you. Over to you all for any questions.
Thank you. Ladies and gentlemen, we will now begin the question and answer session. Anyone wishing to ask a question may please press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Achal Lohade from JM Financial. Please go ahead.
Yeah, congratulations for the performance, sir. If you could highlight on like-to-like basis, what was the growth in pressure cooker, cookware and appliances respectively for the fourth quarter?
Okay, the pressure cooker and cookware business has grown by about 2.5-3% for the quarter. The appliances have grown by 28% for the quarter. And the reason for this primarily is because we had a price increase in the last quarter of last year, which had been some extra stocking that had happened in the channel, which was not there this year. Now, the two quarters are not strictly comparable because last year Q4 was just after demonetization, and this year there was no such effect.
Okay, so on a like-to-like basis, excluding the, or rather, let me ask in other fashion, what was the GST impact on the revenue? Because last time you had indicated about 5% impact on the top-line growth on account of this GST related disclosure. So is it the same even in the fourth quarter?
I'm afraid you can't quantify that exactly. It depends upon the product mix. Each product, the GST effect varies. Roughly, you can take about 8%.
8%. Okay. So,
whatever we short down, I multiply to 1.08. So for the quarter, about 23%.
Understood. And if you could highlight for the full year as well, what is the like-to-like growth?
Again, assuming the 8%, which again, like I said, depends upon product mix. But if we take the 8%, top line growth by is 19%. Okay.
Also, if you could talk about how the situation looks like, what kind of growth one can expect for FY19-20. Just a broad color, are things looking better or are things remaining pretty much there they are for last few quarters?
Repeat the question, please.
In terms of growth outlook, sir, what kind of growth do we look at in the coming year?
Yeah. We will stop giving guidance, but the market is looking good, so we expect to grow similar growth next year also. In April, we had a double-digit growth. Yeah.
Sounds great. In terms of the appliances, if you could highlight, in terms of how the gas stove and other products have done, and what kind of new product categories are we looking at in the coming year?
So in terms of appliances, across the board, we've had very good growth, all double digits plus. And I think we've released, you would have seen 29% growth for the quarter. And all main categories like gas stoves, mixer grinders, all of them have exhibited an extremely robust growth.
Got it. In terms of new products, sir, any comment on that? How the cleaning equipment have done, and what are we doing at water purifier side?
Well, the water purifiers full-blown launch is happening as we speak right now, because we have wanted to start advertising. The season is now, just before the rains. So that's why we've pushed the launch to this year, to most markets.
Got it. Just last question, sir, in terms of the A&P spending for the full year, where was that? If you could help us with the absolute number.
The A&P is a percentage that is almost constant, whether we've had a good year or a bad year, and it's at about 7% of our top line.
For the full year as well as the quarter, sir?
Yes.
Got it. That's great, sir. I'll come back in the queue for further questions. Thank you.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. The next question is on the line of Ravi Swaminathan from Spark Capital. Please go ahead.
Hi, sir. Just wanted to check with you how the performance of cleaning solution and Judge brand has been. How it has grown compared to, say, last few quarters or year?
Well, first let's take cleaning solutions. Cleaning solutions have grown by over 50% for this quarter. And the Judge brand, we've now appointed distributors in about 9 states. And that is growing as well, though it's very small in this quarter.
Sales have not taken place yet. We've just appointed distributors. So you will see most activities start in the first quarter of FY19 for Judge.
Okay, but how big can Judge be as a brand compared to, say, our core TTK brand? So can it contribute, say, 20-25% of overall revenue over a 3 years?
No, we're not looking at that. No. We're looking at in the third year or fourth year, it's contributing about 15% of overall revenue.
Got it, sir. And say, in terms of the PSK showrooms, is there any plans to increase the reach? It's around 540 now. So is there any further increasing that we are going to do?
See, last year we have undergone a full rebranding of our stores, the franchise stores. So they're now called Prestige Exclusives. They used to be called Prestige Smart Kitchen. And now, after the rebranding has been done, we are now embarking on a store expansion program that is quite aggressive from this year onwards for the next 2 or 3 years.
Got it, sir. And any count in terms of kind of expansion that we are likely to take next 2 to 3 years?
So you will see twice of the number of stores we've added in the previous years, roughly. I wouldn't want to give the exact numbers here. We can't.
Okay.
All we can say is we're going to be aggressive.
Okay. Sir, and in terms of commodity prices, it has been on the rise for quite some time. So any price increase that we might take in the future to offset the price rise?
Yes. Almost immediately a price increase is being planned.
Okay, and blended basis, how much can it be, sir, on an overall blended
We haven't come up with that number yet. If you will email us, probably by end of the month, we'll be able to send you a message.
Got it, sir. Yeah. Thanks a lot, sir. Thanks a lot for the...
Thank you. Before we take the next question, we would like to remind participants that you may press star and 1 to ask a question. The next question is from the line of Ravi Shrikant from Muthoot Family Office. Please go ahead.
Hi, good evening, sir. So my question is related to, could you share the sales breakdown for the full year, that is FY18, between the cookers, cookware, gas stoves, appliances, etc.?
It is there in the note we have sent. Hello?
Hello, yeah. Actually, I could not see it because it does not have a segment split.
Sir, we are not able to hear you clearly. Can you use the handset mode while speaking and not the speakerphone?
It does not have a segment split as such, the document I have.
We are going to upload it in the BSC, but anyway, I'll give it to you again. What did you want to know exactly?
I just wanted the sales segmentation between pressure cookers, cookware, gas stoves, and home appliances.
For the quarter or for the year?
For the year.
He's looking at you're looking at the growth numbers or the proportion to total turnover?
Proportion to total turnover.
Okay. So, cookers are about a third of the business.
Okay.
Cookware is about 15% to 17%.
Okay.
And the rest is appliances, including gas stoves and mixer grinders. 50% is appliances.
50%?
Yeah.
Okay. So these appliances include stoves and home appliances as well?
Yes, that's correct.
So it's broadly same as in the last year. I mean, there's no major changes.
Yes.
Okay. Thank you, sir. I'll get back in the queue if I need anything else. Thank you.
Thank you. The next question is from the line of Achal Lohade from JM Financial. Please go ahead.
Thank you for the follow-up opportunity, sir. Can you help us understand in terms of the Gujarat facility, where are the utilizations for future growth, for near-term growth? Do you need to look at any fresh capex or the existing capacity sufficient?
With the Gujarat facility, we have reached capacity. We are now at full capacity. We are looking at expanding capacity in this year, in the FY19.
What kind of, which product category would we look at for expansion, and what kind of capex are we looking at, sir?
We're looking at expanding capacity in non-stick cookware, in aluminum pressure cookers, and stainless steel pressure cookers. We're looking at about 150 crores this year.
Entirely in FY19 itself, you're saying?
Yes.
And how much would be the expansion? By what kind of percentage in each of these three categories? Like, is it 20-25% or just a 10-15%?
Around 20-20% in each category.
Got it. Secondly, sir, how do you look at hardwood performance given the situation, the macro issues the country has faced? So how do you see now hardwood going forward? Because in terms of number, it looks like we had a pretty bad number for the full year on account of the currency or whatever. How do you look at going forward?
Actually, hardwood had a stellar year last year compared to the competitors. Everybody else had very bad years, made losses. Hardwood made a profit. And this year, the first 2 months have been very encouraging.
Right. Okay. And just another question on the balance sheet. I see the debtor days and inventory days have increased on a YY basis as of March. Is there any working capital which is being extended to, like, are we extending the credit terms for our customers?
First, let's handle the inventory. The inventory, if you look at it closely, the raw material inventory has gone up, which is most tactical in nature because the raw material prices are going up, and therefore we've actually stocked up. The FG inventory hasn't really gone up much. It's well under the proportion of sales increase that we see. As far as the debtor days are concerned, it's actually come down from 51 days to 49 days, while the absolute obviously has gone up. We have not extended credit into the market. In fact, we've tightened it up.
Got it. And just in terms of we look at a 250 crores kind of a cash balance, and we are expecting to generate a fair amount of cash flows even after CAPEX in the current year. How do you look at the utilization front?
We are actively looking at acquisitions both in India and abroad.
All right. Great, sir. Thank you so much for answering questions.
Thank you.
Thank you. The next question is from the line of Avi Mehta from IIFL. Please go ahead.
Hi, sir. Congratulations on the great performance. Sir, essentially, wanted to just understand the excise duty breakup across the categories. Would you be able to provide that for a fourth FY17?
I think you have to speak into the phone. We're not able to hear you clearly.
Sir, I essentially wanted to know the excise duty breakup across the categories for the base quarter. Would that be available, sir?
Excise duty is gone. It's only GST now.
The excise duty on pressure cookers last year in Q4 was 6%. On cookware, we were paying 2%.
Sir, sorry, I was looking for the absolute excise duty paid, sir.
You were looking for the absolute excise duty. It will be there in the SEBI report last year.
Not this year. Last year it was 7 crores in the last quarter.
7 crores in the last quarter.
And about 36 crores for the year.
Okay, sir. Okay. And sir, secondly, have we taken any price increases, which is why the QOQ-wise you've seen a gross margin expansion?
We did take a price increase in April.
And this quarter we have taken price increases on appliances, in some appliances, because of raw material price increases.
Okay. And would you be providing any, I'm sorry I joined a little late, but is there a sales growth guidance for FY19 that you would be willing to share?
We wouldn't want to give a guidance.
There is too much uncertainty in the market. Elections are coming in FY19. What the government is going to do, we don't know. And raw material prices are fluctuating fairly wildly. So we really can't give a guidance for next year.
No, so where I was coming from is, you have ended in a very, very strong wicket. I mean, April has been very, very healthy. And I was just trying to kind of, see if we could kind of share how we feel about the year based on that.
You correctly said we've come out with strong numbers. April has been very good. Now you do the math.
First quarter results, you will know then. Okay. Okay, sir. Sir, lastly, tax rate guidance and capex guidance, if you could give these two.
About 150 crore capex for the year.
Okay. And tax rate, what should I assume, sir?
Tax rate will be 32% approximately.
32% for...
Without taking dividend tax.
Oh, okay, sir. Okay, perfect, sir. I'll come back in the queue for any other questions. Thank you very much, sir.
Thank you. The next question is from the line of Ravi Shrikant from Muthoot Family Office. Please go ahead.
Thanks for the opportunity again, sir. So what percentage of the sales, what is the sales split between the physical store sales and online sales, if you have that?
The online is about 9% of our total revenues now.
Okay. And in the physical, how much would be through own-party stores and through third-party stores?
Sorry?
In the physical segment, which is 91%, how much would be through third-party stores and how much would be through exclusive outlets?
The exclusive outlets are about 17% of our revenues.
Okay.
The rest will be third-party exports, big stores.
Okay. So approximately 74% is through third-party stores of the overall sales.
3% is the export, canteen store department, rural market, everything included.
Okay. And see, so canteen stores would be how much? So you mentioned it includes canteen stores as well?
Stores will be about 5.5% of our sales.
Okay. Okay. Got it. Thanks a lot. Thank you.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. The next question is from the line of Sahil Das Verma from CRISIL. Please go ahead.
Hi, sir. First of all, thanks for the opportunity and congratulations on a very strong number this quarter. So just had one question. Can you give us the split between the South and non-South sales and any qualitative commentary that you might want to give for the growth that you have seen in this quarter in both the markets?
Okay, the South and non-South are 50-50 now.
Okay.
And what we are seeing is that across the board we are seeing good growth, both in the South as well as in the non-South.
Okay. Thanks, sir. I'll go back to the queue.
Thank you. The next question is from the line of Mitul Mehta from Lucky Investment Managers. Please go ahead.
Yeah, hi, good evening, sir. Congrats on a good set of numbers.
Thank you.
Sir, just in your appliances business, can you just break down within gas stoves, mixer and grinders? Just wanted to know in the pecking order which has grown more.
For the year or for the quarter?
For the quarter and for the year.
In the pecking order, gas stoves number 1, mixies number 2, induction number 3, and other small appliances number 4. That's the pecking order. I wouldn't like to give you the breakup specifically. I can tell you, however, that all the four segments have grown quite robustly this quarter and for the year.
Adjusting for excise in the cooker business, in the cookware business, what is the growth? Because if I look at your press release, we haven't grown in the cookware business. So, I mean, if you can just highlight this particular question. Adjusting for the excise, what was the growth in the cooker business?
About 10%.
10%?
Yes.
And so what was the capex that you highlighted before? If you could just...
150 crores for this year.
Are we spending this money?
We will be spending this money in FY19.
But can you give the breakdown of this 150 crore investment?
How breakdown? How? In terms of time, in terms of machinery, how do you want to break up?
How much we are using in Gujarat, where we are using this 150 crores? Broadly, I mean, just very, very broadly.
The major portion of it will be used in Gujarat, but we are increasing capacities in Coimbatore and Hosur and Karadi as well.
And sir, as far as price increase goes commensurate to increase in raw material, how does the current situation look like? We have taken some price increase in the appliance business. So have you taken price increase in the other cookware business also?
We are working on it. We are estimating the aluminum prices and all. We should be taking the price increase probably end of this month or early next month.
As I was saying, we will take a price increase once we find there is a stability in the expected increase in raw material prices. And we will take a call depending upon the stock in the pipeline. We don't want to have two prices in the market. So we will take it appropriately without much lag. We always maintain that our lag will not be more than 60 days.
If I look at your standalone margins, we are now at about 15%, and obviously your consol margins are at little over 13%. So are we likely to kind of sustain this number going into FY19?
Yes.
We should be able to sustain this number.
Yes.
Okay, sir. Thank you very much.
Thank you. The next question is from the line of Avi Mehta from IIFL. Please go ahead.
Hi, sir. Sir, could you explain the reason for the sharp increase in employee costs in the fourth quarter? Is there any one-off over there?
Yeah, we changed our leave policy in line with the market. So because of that, we will have to provide solution for the terminal benefits. It's a one-time impact of around 4-5 crores.
4-5 crores is the one-off impact. Okay. So, sir, if I adjust for that, then coming to the next question, essentially, sir, in terms of, your guidance is on maintaining margins and on being able to, and not anything on guidance on the sales growth rate. But if I look at the current trajectory, which is from 2Q, 3Q, 4Q, you've seen an ability to maintain about 14.5-15%. Thankfully, it's been quite a healthy number over here. So why are we not expecting margin guidance given sales growth levers remain strong? Or just
I didn't give a margin guidance. I said margins will be maintained.
No, correct, sir. You have said will remain flattish is what you were indicating in the last, we'll be able to maintaining.
Very healthy margins. Remember that we're making an EBITDA margin almost 14.5%. Very, very healthy for the industry.
See, you cannot keep on expanding margins. You cannot keep on increasing prices. So the margin, if you maintain 14, any top line growth will certainly yield more profit to the bottom line.
And if you have calculated, sir, you will find that our ROC has improved from 27.8% to 33%.
So correct, sir. So my point was, sir, operating leverage benefits will logically flow through. So logically, our margins should expand. I'm just trying to do the math, and maybe I'm.
Let me explain a little more. The margins are a resultant of two things. One is your gross margins and the actual growth for the year.
Correct.
Now, like we told you, and we are in a situation with volatile raw material costs, and we are working out on how much we can pass on. And while the attempt is to pass on almost the entire cost, what we'll end up doing is something that's still work in progress. Now, we wouldn't like to overpromise on the margins, given that the top line is something that we're not able to predict, given the current situation. And the other thing is, if the capex is going to kick in, I will have extra capacity by the end of the third quarter, which will not be utilized as opposed to the capacity utilization that happened in these 3 quarters that you just mentioned about. That's why we are saying maintaining margins is quite a good performance there.
Okay. That helps, sir. That's very helpful, sir. And secondly, sir, on the subsidiary, which is the Horwood subsidiary, just trying to understand, we have obviously Brexit, something which has not been in our hand, has been impacting growth rate.
Yes.
How do you look at it from the going forward or FY19? Is there anything that, you are seeing which kind of suggests that we are moving to growth over there?
From last year, from FY18 to FY19, we have a budgeted growth of about 7% and a budgeted bottom line growth of about 10%.
Okay. And, sir, while I appreciate that the budgeted growth is or finally a growth, the confidence coming from expansion now, are we looking at expansion into new territories? Is that something that we are focusing on for this year, which should help us achieve that target? Or is it that the Brexit-related tailwinds are off?
It's for local UK sales. Expansion will happen, but slowly. You can't expand a brand overnight. It takes time. We have just got into Europe. We've got our first orders from Europe, and we've also got into America. I've got our first orders from America. It'll be slow. Bulk of what I talked about was UK. UK itself, Horwood did not address all the consumer segments till we got in. Now we started looking at entering other consumer segments. That's why we looked at the growth of the answer, sir.
Okay, sir. Okay, perfect.
UK market is growing at 1%.
Yeah, okay. But the addition of new categories is what should allow us to grow higher than the market is what is the thought.
Yes.
Fair enough, sir. Perfect, sir. This is very helpful. Thank you very much, sir. That's all from my side.
Thank you.
Thank you. Before we take the next question, we would like to remind participants that you may press star and want to ask a question. The next question is from the line of Suvarna Joshi from Axis Securities. Please go ahead.
So thank you for the opportunity. I had 2 questions more on the qualitative aspect. One is, what are your thoughts on the competition in the market, in the domestic market? That is one. And the second one being, you just mentioned in your comments that in terms of pecking order, we have the gas stoves which have done really well for us. Thereafter, we have the mixie segment, then the industrial segment, and followed by the other appliances segment. Now, given that we are in an election year and monsoon is expected to be favorable thus far, how do you see the demand conditions panning out on the ground? And what are your thoughts for the overall industry as such in terms of demand and your own sales?
Okay, we are expecting that the demand should be quite robust. We are also expecting a good monsoon as the Met Department has predicted. And the thing is that the various initiatives of the government will bear fruit in the smaller, lower end of the pop strata and the rural markets because of the Ujjwala Yojana and all of those things and the Awas Yojana. When you talk about all these, we are looking at a good growth rate. So that's looking good. Your question about competition is always as high as it used to be. That we don't see any different trends in that area. The way we have been approaching competition is always with our innovations in the market. Our innovation pipeline is full and we are quite confident this year.
So are we looking at introducing any new products in the market during this year or how would that be shaping up?
100 new products are slated for launch this year.
All right, sir. Sir, and just you mentioned about the Ujjwala scheme. So given that this is an election year, do you see some significant ramp up from the government side happening and therefore benefiting us in terms of overall growth in our volumes for the gas stove segment?
Do you see any dramatic ramp up because it's an election year? You can predict it better than me.
All right, sir. That's it from my end. Thank you so much.
Okay.
Thank you. The next question is from the line of Varun Bang from Reliance PMS. Please go ahead.
Congratulations on a good set of numbers, sir. So just one question. You mentioned about inorganic expansion. Which categories are we looking to grow inorganically?
I'm sorry, which category expect to grow how?
Inorganic, which are the categories you want to grow inorganically?
Hello, he talked about building a cash chest for some acquisition with inorganic. It will be where we are in. We don't have any particular target in mind. We have got a war chest which you can use for inorganic expansion for the company. It will be in the kitchen space or it will be in the home space.
Okay, understood. And this will be for the domestic market only?
Domestic market. We are also having...
we're also looking at overseas market.
Okay, understood. Okay, thank you, sir.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. Participants, if you wish to ask a question, you may please press star and 1. A reminder to the participants in the conference, anyone wishing to ask a question, may please press star and 1. The next question is from the line of Akriti Shah from Sameeksha Capital. Please go ahead. Akriti, your line is unmuted. Please go ahead. Akriti, your line is in the talk mode. Please go ahead.
Hello.
Hello.
Yeah. Good evening, sir. So you've already launched the cleaning solution segment in few markets. So how do you see the response, and do you see these segments contributing about 8 to 10% towards the revenue in the coming 3 to 4 years?
Yes, it is doing well. We've still not launched across the country. We will be rolling out the launch. Hopefully by this year end we should finish the launch process, and we do expect it to contribute about 10% to the top line of the company in 3 to 4 years.
Okay. And so with the aggressive expansion in the TTK, as you just mentioned, and you're also expanding capacity, so if you could just give us some guidance on the capex front for the next 2 to 3 years?
Like I said, we'll be spending about 150 crores this year, probably a similar amount next financial year, FY20.
Okay, sir. Thank you so much.
Thank you. The next question is from the line of Atul Mehra from Motilal AMC. Please go ahead.
Yeah, hi, sir. Good afternoon and thanks for the opportunity. So just on the export business, so in the past couple of quarters, we've spoken about we being at an advanced stage. So where is it at this point in time in terms of...
I'm happy to inform this. We've acquired our major customers, and our export I expect to at least double this year.
Right. And so just on the capex front, given we would have existing unutilized capacities,
no, we don't have any unutilized capacity. It's full now.
Running full now.
Yeah. Which is why margin expansion happened.
Right. And maybe I just perhaps missed that. So the new capex that we are lining up, is it across segments or any particular line that we're looking to expand?
Largely in cookers, cookware, stainless steel and aluminum.
Right. All right. Thanks, and wish you all the best.
Thank you. The next question is from the line of Suvarna Joshi from Axis Securities. Please go ahead.
So thank you once again for the opportunity. Just wanted to know your thoughts on the rural market and how has rural market grown for you versus the urban market, and if you could just give us a split in revenues between the rural and the urban market.
Okay, the rural market is growing or seeming to grow faster than the urban market, certainly. But we will not be in a position to give you a split up because rural markets are reached through semi-urban and lower small town markets. There are no direct distribution in the rural markets. So we won't be able to give you a split, but we can feel that definitely the rural markets are growing faster than the urban markets.
So would it be growing at about 1 time the urban or maybe faster than that as well?
Will it be growing at what?
Will it be growing double the urban or should be lesser than that?
You can say it's higher than the urban market, but I don't want to put a number on that.
The base is so low.
Yeah.
Any growth will be very high.
All right. Great. All right. So thank you so much.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. Participants, if you wish to ask a question, you may please press star and 1. The next question is from the line of Hemant Patel from Alder Capital. Please go ahead.
Yeah, hello, sir. Just had one question. I'm trying to understand your manufacturing outsourcing that you are actually doing at the moment. With this increase in capacities that we're talking about for FY19 and 20, are you trying to reduce the quantum of outsourcing and increase the in-house production? And in doing so, if so, what is the reason behind it? I'm just trying to understand that.
We have not outsourced even one pressure cooker in the last 57 years. So we do not outsource pressure cookers. We outsource a very small number of cookware for the lower market segment, and that is not going to go out. We will continue to outsource that.
Okay, so then when I see this large line item on the P&L, which is purchase of finished goods, which is at least for FY18 at 609 crores, that would pertain...
Appliances.
Sorry, can you come again?
That would pertain to appliances, gas stove.
Okay.
Yes.
And that you're saying that will continue to be outsourced as you go along?
Yes.
All right. Thanks a lot.
In India, though.
Understood. Thanks a lot, sir.
Yep.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. Participants, if you wish to ask a question, you may please press star and 1. As there are no further questions, I now hand the conference over to Mr. Archit Vashni for his closing comments. Hello, Mr. Vashni. Hello. Yes, sir. Please go ahead with your closing comments.
I would like to thank you all on the behalf of Ambit Capital for attending the conference call. Thank you. That is from my side.